Good afternoon. Welcome to Mid-Cap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, afternoon, Vivek. The story today is, of course, that recovery that we've seen on the mid-caps for sure. From the lows of the day, it has recovered. And now in the green, advance decline ratio in favor of the advances. There's recovery otherwise as well. But what we've seen in mid-caps is something which we should talk about.
Right, you're absolutely right. Quite a sharp recovery, from the day's low. You actually opened quite weak, but after that, the breadth of the market has done really well. Some of the stocks, that was down and out have actually seen quite a bit of buying emerging from the lower levels. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks trade range in a volatile trading session following Powell's indication of gradual cuts and a rise in tension in West Asia, even as China eyes a recovery ahead. IT and PSU banks are prominent gainers, even as pharma and realty drag.
Muthoot and Manappuram Finance under pressure after RBI spots deficiency in adherence to prudential norms and in business practices of gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts don't see limited impact for large gold financiers.
Nalco surges in trade after Kotak upgrades the rating on the stock to an add from sell, cites attractive risk reward and the ongoing supply tightness in the alumina market as the reason for positive commentary.
Angel One revises brokerage charges effective today, also introducing a flat brokerage charge of 20 rupees per executed order for cash and equity delivery transactions. Stock is up over 4%.
Interglobe Aviation surges after ATF price cut to 87 rupees per kg from 93,480 rupees per kg earlier. This is the second month where you have seen an ATF cut by all marketing companies.
Okay, all right. Those are the top headlines that we are tracking for you for the Nifty. It's been quite volatile, to be very honest. Right now, we are in the red and it's been very choppy. But do note there has been a recovery from the lows that we have seen on the Nifty in last couple of minutes yet again. Mid-caps, they are the stars for sure. 190 points higher on the mid-cap index as we speak. That's a massive recovery that from the lows that we are talking about. This index is at the day's high. And the advance decline ratio, the line should come up for you on the screen. We have around 2,400 stocks on the BSE which are advancing versus declining stocks of around 1,700, and we have seen the advance decline ratio continues to be in the favor of advances as well. The PSU banking index, the auto index, that continues to do well. Small caps are also contributing today. The bank Nifty, though, quite choppy.
Bank Nifty quite choppy, under pressure. One segment of the market that actually opened lower but has seen quite a bit of buying emerge is actually the metal pack. So if you look at names, we actually highlighted Nalco at the start of the show in terms of one of the stocks that are doing quite well. But even if you look at a name like NMDC, where there have been price hike undertaken, you actually see quite a bit of buying emerge from the lower levels. NMDC too is doing quite well. But a whole host of other stocks is what Hormaz has on his radar. He's standing by the wall to take us through the mid-caps that are moving around in the session.
Well, it does look like the benchmark indices have slipped into holiday mode already, but the small caps still want to be part of the action, and that is showing up in the broader markets. The mid caps and the small cap indices are outperforming in today's session. So we will start off with the gainers today within the broader markets, and PB Fintech and Paytm are topping this list. Both are at the highest point of the day. PB Fintech is now up 5%. Another positive brokerage commentary came in today on the stock. It has been in focus over the last couple of weeks over its capital allocation policies. Paytm too now above 700, 5% higher there as well. What is also having a very good day is Polycab at the highest point of the day, another 5% today, and Wellspun Living up 6% in today's session. All these brokerage related names have been in focus as well. BSE, MCX, NSE, all of them revising their transaction charges. All of them are off the highs of the day, still holding on to gains of around 2.5 to 5%. A lot of brokerage commentary came in this morning as well, and that with regards to the gold financing names, and they are bearing the brunt of that in today's session. Manappuram off the lows, but still down 2%, while Muthoot has now slumped to the lows of the day, 3.5% lower. But Nalco, after that upgrade from Kotak, is going from strength to strength, 8% higher in today's trading session. Stocks that are doing well on the back of very strong volumes, and BASF is now up 10% at the day's high, as is KFin Tech. Blue Dart, after the price increase, is up 6%. and Atul is having a good day within the specialty chemical names. And lastly, some stocks that are not having a very good session despite the broader markets doing well. Westlife Food World at the day's low now, 4.5% lower, as is Intellect Design, Phoenix Mills, and Motilal Oswal is seeing some bit of profit booking from higher levels. Back to you guys.
A lot of stocks in the broader markets which remain in focus. Thank you so much for joining us as always, Hormaz. Atul Auto, by the way, reports its total sales up 26% in the month of September. Let's welcome Shrikant Chauhan of Kotak Security for a technical check on the market. Shrikant, good afternoon. Thank you so much for joining in. Tell us what's the next level to watch out for on the Nifty, and how are you looking at Bank Nifty currently?
Good afternoon, Sonal. Good afternoon, Vivek. For Nifty, it is it was around 26,400, 500 levels. From there, all the way it is corrected back to the important support levels of 25,700. And now it is consolidating around the same. I am of the view that today, in case if we see the market is crossing the level of 25,850, then we can expect further more upside during the day. Otherwise, we are going to consolidate. And in the worst case scenario, we may even see the levels of 25,500. That's the overall view. So because it's a expiry day for Bank Nifty, we can see some activity in the second half. But for that, we need to cross the level of 25,850. And for the Bank Nifty, I think there also 53,050 is the level above which only we can expect bullishness.
Okay, Shrikant. Shrikant, what are your top individual picks for the day?
Yeah, Vivek, I think these commodities are really doing well, and whatever the momentum that we are seeing right now, it is specifically into commodities and in private banks. But because of banks' weekly expiry, I think all these private banks are under pressure, but commodities, definitely they are going to do well. In that, we like Nalco, but currently it is very close to its first immediate resistance of 235, 236. So there we need to be careful. And that's the reason it is better if we go for a few other stocks. In that, we like Hindustan Zinc, which is currently trading around some 520, 525. There also, I'm seeing the pattern of rounding bottom sort of formation after hitting the important support levels. From here, again, Hindustan Zinc can reach the levels of 560, 575. That's the overall view. So here, we like Hindustan Zinc. It's about current levels. And from the other, few other stocks, we like PB Fintech, Policy Bazaar. And there also, the stock has taken excellent support close to 1600, 1650. And from there, it is rebounding. I think based on its technical formation, the stock can again reach the levels of 1950 or 2000. So PB Fintech, Policy Bazaar is also a buy at current levels.
All right. Thank you so much, Shrikant, for joining in with those technical bets. We'll slip into a short break. When we come back, we'll get you more on the markets, put focus on India Glycols, Angel One, Nalco. All these stocks are buzzing in trade today.
Welcome back to Mid-Cap Radar. Quite a few stocks, from the broader end of the markets that are seeing quite a bit of an up move today. First up, two stocks from the media space. So if you look at names like HT Media, Z Media, especially if you look at Z Media, the stock has done really well in the last week or so. The stock has seen a significant up move. Today also perched at the upper circuit of 10%. HT Media too is doing quite well. Another stock, linked to the capital market theme has been KFin Technologies. This stock too today has seen a very strong up move. The volumes too are quite strong here. The stock up almost 9% in the session today. And three stocks, from the agrochem space, that are doing quite well in the session today. Number one is BASF India, BASF India. That stock is doing quite well. Chambal Fertilizers and Deepak Fertilizers too, after a while seeing some buying emerge as far as the agrochem space is concerned. But Sonal, you've been tracking one stock, India Glycols, the stock's doing quite well. The company has announced a capacity expansion. Please tell us more.
Capacity expansion across segments, right? That is what the company has announced. So first is the 100 kiloliter per day of capacity expansion in grain-based distillery. All of them happening in their Uttarakhand facility. This takes the total capacity to 500 kiloliters per day. The second one is that their biofuel fuel ethanol plant, which converts ethanol to biofuel. That is again at Uttarakhand, Kashipur. That's where they're adding around 180 kiloliters per day. Thirdly, they're also adding 2,500 tons of chemicals capacity, chemical products. It's a commodity chemical space that we are looking at. So these three things is something that is preparing the stock higher, because that would bring in additional revenues as well for the company. So India Glycols up by around 8% in trade today. But let's move on and talk about Nalco. It is surging in trade on the back of positive commentary coming in from Kotak. Nigel is here to tell us more. Nigel, what is Kotak saying about Nalco?
Well, that's right. Kotak has gone ahead and upgraded Nalco. They had a sell rating earlier, now they have a buy rating. Earlier, they had a target price of around 160. Now they have a target price of 235. Now, a couple of factors is what they've tweaked. One is on the earning estimates. They've upgraded it for the next 3 years. So that's point number one. The other factor that plays out when you go ahead and increase your target price is when you increase the multiple. Earlier, they were giving a multiple of around 5.5 times. Now they're giving around 7 times. And there are 4 big reasons why Kotak is positive on Nalco. Point number one, they've upgraded their estimates both on alumina as well as on aluminium. Point number two, they're taking into account the alumina short supply globally, and that's what will help support prices from here on. So that's on the pricing side. The next factor is on the cost side. They're getting some part of their coal requirement from captive sources. That's what happened in FY24. That's what will happen in FY25. And going ahead, they're expecting these coal blocks to ramp up, so they'll save on cost. And point number 3 is volumes. That's been a bit of a problem pocket for them because volume growth hasn't been coming about. But they are factoring in from the second half of FY27 that alumina refinery, the expansion will come on stream and it'll help the volumes as well. So all these 3 factors, better pricing, lower cost, and operating leverage will play out. So that's why Kotak is positive on the stock. Back to you.
Thanks so much, Nigel, for explaining the up move as far as Nalco is concerned. The next stock on our radar is Angel One. The stock is buzzing in trade as the brokerage firm has revised brokerage charges for cash as well as equity delivery transactions. Vamakshi tells us more.
Well, absolutely, Vivek. The stock is surging in trade. In fact, even yesterday, the stock was up, and that is because Angel One has revised the brokerage for cash and equity delivery transactions, and this will be effective from 1st of November 2024. The brokerage charges that will be levied are at flat rupees 20 or 0.1% plus GST, whichever is lower this is per executed order. The minimum brokerage will be at almost rupees 2. Angel One, keep in mind that earlier on they did not have any brokerage for the cash delivery transactions. In fact, the company was offering the lowest brokerage rates as well as lowest other charges as compared to some of its other discount broker peers. Now, this revision in the brokerage has come in after NSE and BSE both revised their transaction charges with effect from October 1st. Both of these exchanges have moved away from the slab-wise structure wherein the brokerages would earn some amount, pocket some amount, basis the difference between what they would charge the client and what they would be able to pay to the exchanges. Now, NSE has now moved on to the flat free structure, and overall this impact could have been 8% on Angel One is what the management has highlighted to us back in July. This revision in brokerage charges could be a measure to mitigate that impact, and therefore it bodes well for Angel One. But overall, we will be watching out for the volumes that could be impacted on account of higher brokerages. So given those factors, Angel One on our radar.
All right, Angel One in focus. We've been seeing that this is something that was expected, of course, as Vamakshi has been pointing out. Let's do one thing. Let's slip into a short break. When we come back, we'll get you more on the markets and a lot of stock-specific action and management commentary on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Max Estates, that stock is in focus. Their Gurugram project witnessed pre-sales booking value of 4,100 crore rupees within 30 days of the launch. Rishi Raj, the CEO of the company, told CNBC-TV18 that they are expecting pre-sales of around 5,500 to 5,600 crore rupees in FY25. He also added that the company plans to add at least 3 million square foot every year to their development pipeline. Listen in.
We are revising 100% booking value guidance to 4,800 crore to be done in FY25. So this is in summary the response to Estate 360. We have some units remaining. That's why the total 100% booking value guidance is now 4,800 crore, of which 4,100 crore has already been booked. This year, the total guidance is 4,800 crore from this project, and we expect to now launch Tower 4 in Estate 128, which will add to another 800 crores of booking value. So total booking value will be in the range of 5,500 to 5,600 crores. Our guidance to the market is that we will continue to add at least 3 million square foot every year to our development pipeline. And that's where the focus is going to be, which will help us increase our booking value from where we are and grow that booking value in coming years.
An important commentary coming in there from Max Estate. Now moving on, Northern Arc Capital's MD and CEO tells CNBC-TV18 that they have been growing over 30% in the last 3 years and expect to hold the growth rate at these levels. Also tells that they are looking at higher productivity going ahead. Do listen in.
We've been consistently growing at over 30% year on year for the last 3 years. Our Q1 growth is broadly in the same line. Growth on a YOY basis is over 32%, and I think we should be able to hold a similar kind of a growth number. We did tweak the model beginning of the year to ensure we have a higher amount of good book provisionings. So that's almost 60 basis point. What you see as a credit cost last year of 120 basis point has gone to 170 basis point. That includes a higher amount of good book provisioning given the stress we are seeing and to ensure there is an overlay sufficient for us. So that's taken us to 170 basis point. The jaws are actually expanding. If you look at it, your income is growing faster than expenses, and expenses broadly should stabilize. And we should aim to get higher productivity gains as we look forward.
Well, that was the recently listed Northern Arc Capital speaking to us earlier today. Well, yesterday, the SEBI at its board meet announced a slew of measures. Shivani Bajaj has the details.
Well, yes, a slew of measures were announced late last evening by the market regulator after the board meeting. Many of these announcements were expected as well. SEBI announced that the stockbrokers must implement a UPI block mechanism or 3-in-1 trading by February 2025. Another important thing for the market is that the regulator has expanded the T+0 settlement cycle to the top 500 market cap stocks. Another important thing that was expected is that SEBI has announced a faster process for rights issues, now completing within 23 working days. Promoters can renounce their rights to specific investors, enhancing flexibility. One of the things that everyone was watching out for, SEBI has also launched a new asset class bridging the gap between mutual funds and portfolio management services, the PMS, aimed at tackling unregistered schemes and providing investors with flexible regulated options. The minimum investment is set at 10 lakh rupees and the safeguards include no leverage and capped derivative exposure. On the mutual fund side, the new MF Lite framework has also been announced. The new norms ease compliance for passive funds, allowing asset managers to opt for relaxed regulations or hive off passive schemes. The regulator has expanded the definition of connected persons under the insider trading regulations as well, now including firms and individuals sharing households with connected persons that were defined earlier. This is one of the things that is seeing mixed reactions from the experts. Interestingly, no announcements on as expected on the F&O segment as of now. Back to you.
Thanks so much for that, Shivani. Well, just taking a look at the markets, the Nifty and the Bank Nifty back in the negative territory, flattish, but still under the main or the midpoint line. While you're talking about the mid-cap and smaller small cap indices, they're actually doing slightly better. The small cap index today outperforming the benchmark indices. But with that, it's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner when we return.